Hey, everybody. Welcome to this month's Concierge live stream. Really excited to have you here. For those watching, it is Wednesday, June 10th. My name's Pat Dunn. I'm head of Concierge Services here at Robinhood, and really excited to be spending a Wednesday afternoon with everybody. So thank you for joining us. So today, really excited. We're going to dig into a service that's now available to concierge customers through our partnership with Sage Home Loans. So this is home equity lines of credit, also known as HELOCs. So we're really excited you're here. We're going to have a great conversation today. And so we're going to get into that. Some housekeeping real quick, some disclosures as we get started. Robinhood Gold is a subscription-based membership program of premium services offered through Robinhood Gold LLC, including access to home equity products from Sage Home Loans. Sage Home Loans is an equal housing lender and is not affiliated with any Robinhood entity. For licensing information, go to nmlsconsumeraccess.org. Not available in all states, and Robinhood is not a lender. A HELOC uses your home as collateral. Falling behind on payments puts your home at risk of foreclosure. Interest rates are variable and may change monthly. Last but not least, Robinhood Financial LLC is a registered broker-dealer. Robinhood Securities is a registered broker-dealer and provides brokerage clearing services. All right, we got that out of the way. We got a great show for you today. We're going to be unpacking quite a bit. We're going to be unpacking what are home equity lines of credit, why Sage, what is their role in this process. We have a guest here with us. We'll go through the benefit of HELOCs, talk a little bit through state and local availability for everybody out there. We'll also jump into the app. We're going to show a live demo. I know we've gotten questions in the past. How do I find the Gold Hub? How do I find these benefits? We will walk you through that so everybody will step away knowing where to find all the benefits accessible to them. And then we're going to wrap up with a Q&A. So for the Q&A, we just ask that you scan this QR code. We can leave it up here for a second. Scan that with your phone. It's going to bring you to an app called Slido. Through there, you'll be able to ask the questions, and we will get to those later in the show. We really would love to hear from you. I'm sure we'll drop this link in the chat as well, but we will flash this throughout as we get towards the end, do QAs. We'll bring this back up on the stage and allow you all to see it and scan it. So without further ado, let's welcome the guest for the hour, Mike Malloy. He is the CEO of Sage Home Loans. Mike, welcome. I'm so excited to do another one of these with you. So thanks for taking the time. How are you doing, sir?
Awesome. Thanks for having me again, Pat. We love our Robinhood clients, especially our Robinhood concierge clients. We love the partnership and are really excited to roll out a home equity line of credit because we think it'll be a great product for the Robinhood Gold and especially the concierge customers these days.
Yeah, absolutely. Thanks for taking such good care of our customers. So tell us a little bit more about yourself and Sage Home Loans.
Yeah, so I've been in the mortgage business more than a minute. A little of this gray hair with the rates where they are at the moment. I'm earning it. But I'm the CEO of Sage Home Loans. I've been in the mortgage industry 20 plus years. Was at Rocket in the old days, Bank of America before that, and joined Sage a couple years ago, growing our business with the idea that we can make mortgage simple. And so we're going to talk about a product today that's incredible and is so simple for people to think about how they are managing their cash flows, how they're managing their financial affairs, and how this could be part of their overall management of their cash, their treasury function, and their investment portfolio.
Fantastic. Well, I think with that, Mike, we got the slides, I think, loaded up and ready to go. So they can get them up on the screen. I'll let you take it away.
Yeah, let's let it rip here. So a HELOC, one of these funny words out there, home equity line of credit. So real simple, it is a revolving credit line. Think, credit cards are also revolving credit lines, but it is a revolving credit line that is secured by the equity in your home, usually as a second lien behind a first lien, but it can also be the first lien if you don't have an existing mortgage. So how it works, simple thing is a lot of people have a loan on their home, but they've got a great rate. They've got that 3% rate. They've got a 3.5% rate, but they want to, do a renovation. They're looking for money for college. They're looking for we see a ton of people use this to consolidate debt. All those are good reasons. So you can borrow up to 85% of your home's value, right? With a home equity loan. You draw the funds as needed. It's a 5-year draw period. There are different rate options. We'll talk about that a little later. There's no reselling of investments. What we're doing is we're underwriting this incredibly quickly, within a couple minutes, actually, usually, and it doesn't reset your existing mortgage. So we see a ton of interest in this product from people, again, who have that very low rate that they got maybe during the pandemic, but they're looking for additional cash and they've got a lot of equity in the home. This is a great product, again, that allows you to get a chunk of cash now without resetting maybe that very attractive mortgage rate you got a couple of years back. So why? As I said, home improvements, high interest debt, purchases, business investments, liquidity. It's not a taxable sale, so you're not creating capital gains or anything like this. And we find that this product we've got is particularly for people who are looking for cash very quickly. We'll talk about the process, but you can get approved. We've had people get approved in as little as, you get an offer in a minute. You can get approved and fully signed in 16 minutes. You'll have cash in your account within 5 days. We got a rescission periods under the law. So this is an incredible product when you're looking to move quickly at an opportunity, or where you're looking to change that cash flow perspective you've got and create more liquidity for you and your family. So why Sage? Well, as I said, we're a partner here to Robinhood, and we have formed this incredible partnership. We have on the Gold Hub, and Pat will show you where to find this, an incredible first mortgage product. For those who don't know, 75 basis points, so 3/4 of a point off the industry average for your rate. And we're adding to that today with this product. So in the Gold Hub, you'll find both our first liens and this home equity line of credit. And we have a special discounts for gold and an even better one, Pat, for the concierge clients who we love so much. What is this product? Speed. As I said, less than a week, we can go up to a $400,000 limit, and that can fund in less than a week. We have saving, 2% discount, a fee discount for concierge, right? 8,000 up to 8,000 savings. Our gold clients, who we love, of course, also 1% discount for any gold subscriber up to 4,000. So great opportunity to save a bunch of money as you look at how this can help you in your family manager affairs. Fully digital, as I said, this thing is really slick. Approved in a minute. You can get to signing your docs. Again, the record we have is 16 minutes end to end, and then funded. There's a rescission period of 3 days under federal law. Neither we nor anybody can do anything about that. That's for your own safety, right? But the money can be in your account, again, as little as 3 to 5 days, which is absolutely incredible, particularly for this kind of liquidity. Again, up to $400,000, depending on the equity you have in your home. Yeah, flexibility doesn't have to be 400K, can be as small as 25K. We see people use these a lot. The average we see is around $100,000. That's a lot of those renovation loans that people are doing because they have that great rate and don't want to leave their existing home. Also, we see people using it for consolidation, debt consolidation options. So good things here. As Pat will show you later soon, it's in the Gold Hub. With all the other Sage offers, so both the first lien, purchase, refinance, and HELOC. It's available now on the web. The next app push is coming on June 24th to update the app, and so that's when it'll be available in the app. But if you want it today, and actually with the social media, we've already had a couple inquiries, Pat. You can get it through the web right now. Key features, we've talked about this. This is very simple. We have a discounted fee, the quick funding, and then up to 85% of the equity in your home. And so think about it this way: if you got a loan in 2020, you may have borrowed, up to 70, maybe even 80%. We've seen home prices continue to rise. We've seen people add equity. The last stat I saw, there was $32 trillion in home equity in homes across America. And but because so many folks have low rates, they got that sort of lock-in effect of, boy, it's tough to move when I'm looking at a 5.5, 6% rate, and I got that 3% rate. And so people using these home equity to do renovations, to do additions, to put in that pool their kids want, and other things and because you can go up to 85% home equity of your home equity provides a great option there. So as I said, we also have our first lien. So beyond the home equity line of credit, we also have our first liens, conventional and jumbo, right? 75 basis points below the average and a closing credit. As we said on the last home equity, the last deep dive session, which is that YouTube link. And we have that same discount up to $2.5 million for jumbo loans for our concierge clients. We know that that's a huge need and are providing really incredible. You think about 75 basis points in rate across $1 million loan. That's hundreds of thousands of dollars of savings potentially over a 30-year term. So huge discounting there that we're doing, and that's why we're seeing such great take up of that offer. So state availability, this is not availability in every state yet. We're working on it. And then there are some other things. You need to be a gold subscriber. I think everybody out there is. You're tuning in here. You're a gold subscriber. Eligible states, minimum FICO 600. Rates will differ. We'll talk about that. One of the questions I think was about where rates are. Rates differ based on LTV and FICO, but the minimum score is 600. And then you apply directly through the hub. Pat will show you this, but you go directly through the Robinhood Gold Hub. It takes you into our application form, and but it's all fully integrated and pure digital. So it'll be very simple. Those are the states, as you can see, there are a handful of states in the Midwest we're still working on. But for the majority of the country, we're live and we'll be providing these options, and so excited to serve what is basically about 85-90% of the country at this point.
Fantastic. Great stuff, Mike.
Yeah.
Before we show everybody, Mike's been pumping Concierge for me as the head of Concierge. I love that. So I did want to talk really quickly on what is Concierge, how to join Concierge. So I don't want to dive too deep into it, but Concierge really is our highest level of service for our customers, and it really is split. Either have $1 million across all of the Robinhood accounts, that can be retirement, brokerage, bank, or be our most active, engaged customers. So between those two, if you meet one of those thresholds, you're part of our concierge team. If you are not part of concierge and you think you qualify, I would love to have my team speak with you. I have a great group of onboarding leaders out there that would be happy to speak with you. If you just go to robinhood.com/concierge, put in your info, I would love to have my team speak with you, help you out. So go there, click the link. You'll be able to connect with my team. You'll get more information about becoming a concierge member. So for anybody that qualifies, we would absolutely love to have you. So, all right, I'll let this finish scrolling so you can kind of see what it looks like on the website. And then let's jump into the Robinhood web. I know we mentioned the later in the month it will be on the app, but let's jump into the web. So if you go to the web, you'll see that gold link on the top. That's going to bring you to the Gold Hub. If you go down to exclusive home lending rate, this is going to open it up for all of your home benefits. Now, today we're talking about HELOCs. So when this is clicked on continue, you'll see your options. We'll go ahead and click, I'm tapping my home equity. We'll click on the next steps here, and it will bring you through the process. From here, we go into Sage's portal. This is pretty similar for anybody that has taken out a mortgage, has taken out a loan. You're going to go through, you're going to fill out the info. It's going to ask a couple questions here about your home. Continue to ask. It'll gather some information on your current equity. We'll go
And you
through.
note there, it estimates the property value there for you, Pat. So that's
Nice.
using our automated value model, and so that's again helping people understand the amount of equity they can access.
Fantastic. And then it's going to have you verify your income. Once you go down, we'll hit continue. Let's see, with the magic of showmanship here, it should push through, and great news. So, and that's as simple as it can be. So Anything else you'd want to add there, Mike?
Yeah, so this is the digital flow. It is very slick. We also have dedicated equity loan officers, just like we have loan officers who serve all of our clients. And so as you're going through this flow, if you complete it yourself, awesome. If you just want to hit that button that says I consent, one of our folks will reach out to you and walk you through the process, advise you on the options, talk you through what you're seeing, different combinations. You can have you can buy down your rate a little bit. You can have slightly higher fees but lower rate. Higher rate, lower fees. That's the kind of thing our folks will reach out and walk our clients through. But it can be done digitally incredibly quickly, or one of our folks can walk you through and sort of advise you on the push pull. We have a bunch of questions, and those are the kinds of things that our people are advising on every single day.
Yeah, absolutely. I think what's important to know here, Mike, is that there's teams on both sides supporting you on this journey.
Yeah.
So if you have questions about the front end, the gold hub, exclusive mortgage benefits, I know they're going to, if they haven't yet, they'll drop our help center article. We also have live support. I know some people, if you're newer to Robinhood, maybe you've never needed help yet, but we have live agents here ready to help you. Any account questions, whether you're concierge or not, we can help you navigate all the benefits, make sure you're having a great experience, and then happy to help support you as you cross over that bridge and work with Sage as well. We're always going to be here for you every step of the way. And as you can see, Mike and I are very close. If you have any questions, reach out to me or him, and we'll personally help you as well.
Same shirt, same haircut.
Which is
We got it going.
Yeah, yeah. I think I got the face for radio though. So all
No,
right.
no. You got less gray hair than I do too.
Right. One day I got the kids that are turning that gray. All right, let's jump into our Q&A, Mike. So
Yeah.
don't forget you can scan the QR code. So this is going to bring you for those that are just joining. This brings you to Slido, which will allow you to ask the questions. It'll get it to the team, and we'll be able to roll from there. So this is my favorite part. I will say, Mike being a good friend, he's also a good culture fit with Robinhood. Robinhood, we love spicy questions. I've done these before with Mike. He likes spicy questions. So please don't hold back. The more you can ask, the more we can all learn and make sure this is a great experience for everybody. So we got our first one. We got one from Jeff. Jeff is asking if I already have a HELOC through another organization, what is required to switch? There's no balance on the existing HELOC.
Yeah, so Jeff, the you can't switch it. I mean, obviously you've got that with your other lender. That's their product. If you are interested in doing one where you access and you want to access the funds, or you want to use the opportunity to get a lower rate, we're happy to work with you, but it wouldn't be so much a transfer as you close that one and we could reopen one for you. We're happy to get someone on the phone with you to talk about the rates and the comparison to say, like, is that a better opportunity for you? Because we're here to serve, but don't want you to close your existing one if you got to get something good there. But we would be happy to have someone reach out and walk you through the pros and cons.
Fantastic. All right, going on to the next one. I'm going to do my best to pronounce this name correctly, so I apologize. But Jignesh asks, how do these home loans work, and what type of products are available?
Yeah, so with Sage Home Loans broadly, we have conventional loans, FHA, VA, jumbo, as well as some additional. So we have virtually every kind of first lien loan. So if you're looking for a new mortgage, either a purchase, a refinance, you're a first-time home buyer, we've got the full suite of products there. Then this is additionally a home equity line of credit where you own a home and have equity in it and want to tap that and turn that into immediate cash. So we've got every, all across the lending spectrum, any type of, sort of secured loan secured by your home, we've got products for you and happy to help. And if you hit that app, tell us what you're doing, we'll have someone reach out and walk you through the different options.
Yeah, and I would also, if this question is more broadly on their offering, you can see kind of what's available as a Robinhood customer through the exclusive home lending rate option in the Gold Hub. We also have these recorded. So on Robinhood's YouTube, you can watch the past one where we covered the loan product with myself and Mike as well. So.
Yeah.
All right, next question. Um, Peter asks, I own a $1 million home. I have a 470K mortgage at 2.5%. That is absolutely incredible. Congrats. Does it make sense for me to take out about 300K in HELOC to invest in the market? So I can own this one, Mike, without giving any sort of financial advice. I think when people are making decisions like should I leverage a home equity line of credit, should I leverage margin, which is another borrowing product which has its own risks associated with it. I think there's just a lot of factors that everybody should personally explore. So when you think of like a HELOC, that is like we talked about, it's taking out a line of credit, it's secured by the home. So there are adverse risks there to your home if you were to miss payments or if something happened, if that investment goes south. And just like any other investment out there, there's risks associated with it. So if you're taking out money to go into the market, stocks can lose value sometimes very quickly, and that HELOC balance and the interest are still going to be there, even if your investments decline. So I think everything, and I know it sounds like a non-answer, but everything is very case by case. You should look at various factors from, Tax Cut and Job Act changed how the tax treatment is on HELOCs for non-home improvement. Now, on the other side, there are scenarios where you could use it for investment interest deduction. So there's a lot that I would really recommend you speaking with a tax professional or your accountant with as far as weighing the pros and cons, because anytime, like I said, whether it's this product or any other type of borrowing product, it brings leverage into the mix, which can amplify losses. It won't just amplify returns. There is that risk of losses. So I hope that gives a little bit more color to your situation. But if there's further questions, we're happy to help bring whatever clarity we can. So. All right, we'll go to the next one. And this one from Scott, always going to be my favorite. Love watching replays, love seeing how we can get better. Will there be a recording of this video to share? I'd like to see it as I can't make the live video. Scott, when you're watching this, I saw your concierge agent was going to reach out and let you know. Once this passes all the compliance checks and bells and whistles, we will post this on the Robinhood YouTube site. If you don't follow me on Twitter, I know they're trying to build up my Twitter followers. I will be posting it once this is published on there as well. So all my followers will be able to see it. So yes, we will get this out there so everybody can take in the great content we're building today. All right, Joseph, next question. Joseph is asking, my income is dividend from stocks. Can that be used in consideration for means of repayment for the HELOC? Given that I have 2 years of tax returns showing that amount of dividend income, it's approximately $750,000 a year.
Yeah, absolutely. We have all different types of income qualify, allow our customers, clients to qualify for this home equity loan as well as other types of loans. And so here you provide those tax returns. We'd use that in the underwriting and the approval. So absolutely, it does not require W-2 income, tax returns, all different types of incomes, Schedule C income, 1099. All those things we can use. We'll tell you what the documentation requirements are, but it's not just W-2 income.
Got it. Got it. All right. The next question, I know you said it can vary based off of credit score and equity, but John is asking, what is the HELOC rate?
Yeah, and of course it changes, day to day. I think we've all seen rates are higher. There's a lot of stuff in the news. So today the rates are somewhere between 6.75 up to around 11-ish, right? This is a second lien for most folks. And so the way we think about it and the way we talk to people about this is, as you think about home equity line of credit, you've got a standalone rate and cost, of course, but you're also thinking about the comparison between a blended rate. If you got that 2.5% rate, like our friend who noted before, and you take out a home equity line of credit for 6.75, your blended rate is somewhere around 4.5, depending on the size of the two loans. Well, that's a great That's a great combined interest rates, and that's the way we think about this is how does it compare to your other options? You know, for example, a cash out refi for the whole of the home, et cetera. So our folks will walk you through that, but the way we think about the rate is look at it as a blended rate and then think about that relative to the other sources of liquidity you have. And we see it as a great option. You know, most people end up with that weighted average cost of borrowing in the 4.5 range, which you cannot beat with virtually any other style of lending when credit cards are in the 20+%, personal loans are in the low to mid teens. This source of liquidity is very, very hard to beat.
Got it. Thank you for that. All right. I think this one they may have been asking from the last call too, because I know we have a lot of interest in it. So we have a lot of questions on this. Jeremy's asking, when will we see new home build loans for construction?
Yeah, this one is certainly challenging. We continue to work on new build. We can do them at the end of the process. Funding the building of the home is not currently available through either one of these programs, though we're working on that. We find that with our clients, the programs that exist are very intrusive. They require like our people, the lenders people to come out and do inspections of the contractor and architect's work. And our customer base finds that very intrusive. And so we found that that's just hasn't been a good fit for our client base. And so, we continue to look at the options, but it's not been a good fit so far.
Okay, good. All right, we have a little bit more logistic question from Matthew. He's asking two here. Number one, is there a credit check? And then number two, walk us through a little bit once established, how can they borrow money?
Yeah.
Just go through the Robinhood app without talking to anyone. I swear, Matt, we're nice. I would recommend you talk to us because we're nice people. But yeah, how would that work once granted?
Yeah, so there is a credit check. There's a soft credit check that we do on the back end when we show that initial offer. So, Pat was in a test account, but to get the offer, we do a soft credit check. When you decide to go forward, we are required to and do a hard credit pull. But it's only soft credit until you've actually decided you are going forward. So you're not credit impacting in any way until you've decided, yes, I'm moving forward. In terms of can you expand the line? Yes, that's possible. A lot of people, bring a line, get that cash, and they'll pay it down, then they'll access higher or they'll be eligible for more. And that you can do it would not be through the Robinhood app, but we would set you up so you could access and could expand the amount that you could borrow against your home if that's what you were interested in.
And Mike, I don't know if this is where he was coming from, but just a curiosity, I think even from others, like somebody's never had a HELOC and they get approved. What are the mechanics here of actually getting the dollars from the instrument into, say their checking account or wherever they'd want it to be?
Yeah, this is again because it's full digital and because we're a digital lender. The way this works is the money you sign the documents, you sign a series of documents, they're notarized, they're secured documents. We have a 3-day rescission period that passes. If you want to cancel during that time, you have a full right to, and we'll cancel the loan, and we do that for people's safety. And that's federal law. And then after that time, the money is part of the docs they sign are where you want the money, and the money will be directly transferred. I forget if it's ACH or wire, but it's electronically transferred into the place you direct.
Good, good. All right, we got a lot more coming through, so we'll keep
Good.
through these. Yeah, we got Ryan. Ryan is asking, we own our own home outright, no mortgage. Congrats, Ryan. That's fantastic. We want to buy a second home. If we'd like to finance the second home using equity from our primary home, would that be better accomplished with a HELOC, putting conventional financing on our primary home, or simply putting new financing on the second home?
Yeah, it's a great question, Ryan. And I think the answer is if you would hit me up, I'd love to have one of our loan officers talk you through that. All three of those could be great options, depending on the cash flow, the amount of equity, where the home is. Second homes have a higher interest rates attached to them. So they can be higher. And so depending on how you want to do the borrowing, the term you're looking for, the draw period, these are, home equity liens. You can take it all right now and then pay it off much more quickly with no prepayment. As opposed to, a more traditional 30-year fixed rate or even 15-year fixed rate where you're doing that. There's no prepayment penalty there, but that tends to stretch the payments out a bit more. So there are a lot of considerations there. The interest rates would not be terribly different between a conventional second loan today and a home equity of what it would be a first lien home equity on your existing home. But there are a lot of things to consider. And so, please, either go through the Robinhood app or just hit me up on LinkedIn and I'll get someone to contact you to walk you through those different options, because there are different things we'd want you to consider as you think about what is the most both cash interest rate payment and tax efficient for you.
Fantastic. All right. I think this next one's really leaning towards, qualifications. But Michael's asking, I retired early at 52. Congrats to you as well, Michael. A lot of good things happening to people out there. I love to see it. He retired at 52. He only owes about 20% of his home value, so I assume that means 80% equity. Can I get approved for a HELOC without standard W-2 income?
Absolutely. If you're retired at 52, that means you've got investments, you've got business income from somewhere, you got some other things working, you got a big portfolio. All of those are things that we can use to qualify you. So those income types, it requires some different types of documentation, but absolutely we can get you qualified. Again, if you go through the Robinhood app, that's a slightly more complex than your W-2. One of our folks would reach out, walk you through the documentation we'd need, but absolutely we'll get you qualified.
Awesome. All right. Up next, we got Steve. Steve is asking, what are the traditional origination / setup costs for the HELOC? As you mentioned, there's the 2% fee savings for Concierge, 1% for Gold. Like, what is that fee?
Yeah, so those fees can take you down to zero. You can also, choose more, just like on any mortgage product. I mean, again, you can choose more points, origination points, which help you buy down the rate. So we have different options, different ideas, but that 2%, again, that could, that actually can run it all the way down to zero, and then you've bought your rate down a bit. If you wanted more upfront cost to buy down your rate, you can choose to do it. And so that's the sliding scale of rate versus points, upfront fees. But by giving you those first 2 points, we're already as functionally buying that rate down for you and lowering your cost at least 8K.
I have a feeling this is where Steve's going for this. What's a typical origination fee? So saving 2% or 1% of what is
Yeah. Yeah, so think of it's just of the full balance of the loan. So we go up to the $400,000. But as I say, the average home equity line of credit we see is about $100,000. So we're between 90 and 100. With our Robinhood clients, my guess is that'll skew a touch higher because our folks are have investments and assets, and so think of that 1% as literally probably $1,000. The 2% is probably $2,000 on a $100,000 loan. But again, if you take the full amount, the full $400,000, you're getting 2% of $400,000, right? The $8,000.
Got it. All right, this one we could probably rapid fire a little. I know Pete's asking, probably needs a little more clarification. I have an existing HELOC with HSBC. Can I transfer if you have a better rate? Can the HELOC be used to purchase securities, or any restrictions on that? Is a valuation survey required?
So in terms of transfer, no, it's another lender's product, but we can talk you through how ours compares, and you can make that the best decision. As Pat showed on the valuation side, we do an automated valuation. There's a very sophisticated automated valuation engine behind this, so it will do an AVM of your home. If you believe it's more, there is an option for a second way to value the home. But we find that most of our clients find the AVM to be very close to value and providing them what they need.
Yep.
And then in terms of investments, Pat already gave you the spiel on that, which is a lot of things to consider.
It depends. It
It
depends. Right?
depends.
Yeah. And so I, because this was the second question about kind of transferring. So if somebody really sees like, okay, maybe there's a better deal over here, but I have this other HELOC, is it common in this industry for people, what do they do in that instance? If they want to shut down an old one, open up a new one, do they usually open a new one and pay off the old one, or what's
Yeah.
typical? Or is there?
Yes, you can see it do it either way, which is some folks, if they've got a balance here, they'll open the second one. There's a requirement that the other be closed, because these are liens against a home, and if you think about it, like, those liens sit in an order. And so the lender wants to make sure they've got that the right security. So what we see often is folks close out one they have and move over to us because they find the rates to be superior.
Right. And, I think a different way of asking what Pete's asking too on the securities piece, where the way I read into it is like, are there restrictions? You're the expert. I did give the spiel, like it depends on the securities. Like there's a lot of risk, you're levering up, but outside of differences in tax treatments, are there any rules what you can and can't use your own equity for when you're tapping it in? You know, is there any restrictions on what you can use the?
No, not,
Yeah,
not, once the money is in your bank account, it is your money.
yeah, it's as good
We're
as
not
it
going to tell you what to do with it one way or another. But again, they're your funds, and there aren't restrictions. You then have the duty to pay back the loan, but how you choose to do that is entirely your own.
All right, got it. So we got next question. Ezra's asking, this kind of links to the valuation. For those that may have missed it, because I know it did go fast, when you're going through the application process and you put in the address, it pulls up the estimated value of your house. How do you assess from Ezra? How do you assess newly built homes? Are you sending an assessor?
Yeah, so as I said, the the automated valuation engine is very slick. If there have been any sales near you, it'll pick those up. If the land's been platted, it'll pick that up and it'll say, here's the AVM. If that feels way, wildly off to you, we do have a way to sort of, reconsider that. And so we would, you again talk to one of our loan officers, and we'd walk you through the process of how to think differently about that AVM.
Let's see, we got RJ coming in. He's got a few questions here. I don't know if we'll get the verbiage slide up, but what are the current interest rates? What are the loan durations? Wow, I'll let you the
Yeah,
checklist.
so yeah,
What
so
payment
let me let it rip here.
All right.
As I said, current interest rates with the 10-year treasury where it is today, the lowest one is about the same as your 30-year fixed rate, so about 6.8% on up to 11 and a half or so. I could use, wait, got to put that slide back because I missed some of the questions. So there is not you repay it, you have a monthly payment, minimum payment due each month, absolutely. You're paying it down, though you can have a lot of flexibility. These loans have a ton of flexibility, and there is not a penalty if you pay it off early. We want folks to use this for their cash flows and then find ways to manage their finances. So no, there's not an early payoff.
All right. I will pick up the pace here a little bit as we're coming up. Abdul Rab asks, New York timeline. When can New Yorkers get access to this?
We're still working on still working on this. The licensing process there is a significant challenge. So we are we continue to work through that, but it is impossible to predict what the regulators might do.
All right. Maybe as we continue to do this, my goal is that map will be more green and green every time we come together.
Exactly right.
All right, Scott. We got Scott asking, are portfolio loans over a series of investment properties something that you're looking at?
So, Scott, two answers here. First, we do loans on investment properties all day, every day. And we have lots of clients who have used us over and over to do those investment properties. So if Pat owns 10 different rental homes across his region, we have plenty of clients like Pat where we've done all 10 of those mortgages. Do we do them as a group? The answer is no. We are a single family lender. So while we can do repetitive in single families, and anything 1 to 4 units is considered single family, we have lots of folks who have those kinds of investment portfolios, but we don't roll up all 10 and do a single takedown. That's really more of a multifamily product that you get from a different style lender than us.
All right. Ash K's asking, this goes back, a lot of New Yorkers and Texans on this call. Ash K's asking, there's some exclusions, Texas, New York for HELOCs. Does that include all the, I'm assuming, they're asking investment properties, but I'm assuming that's all the mortgage products right now?
For
until
New
you're
York, Texas, we're fully live in New York. Texas has some interesting rules. I won't bore you, but Texas refi, Texas A6, they're interesting rules, but we're licensed there. And if you're in Texas, hit us up on the site. We'll have someone walk you through the options and what we got for you. New York is not, that's a licensing thing for us. It's not a product problem.
Got it. All right. Next one from Mark. What are the underwriting requirements for self-employed? So is it just tax returns? Is it bank statements? What are we looking at?
We would use both for true self-employed sort of Schedule C. It would be tax returns. If it's recurring income of certain kinds, we can do that through a linked lab. My most self-employed as a general matter is done through tax return, but it's a digital upload and then read automatically, and so we can still get it approved very, very quickly.
All right. All right. Raz is asking, and I think I learned this going through here. Raz is asking, what's the maximum amount for HELOC? Is it 400,000?
400K here.
All right. I paid attention to my own live stream. That's fantastic.
Boom.
400K, Raz. Nigel's asks, do you offer DSCR loans or investment loans for a property I want to buy with an LLC?
We do offer investment loans. We don't currently do DSCR loans. We've been looking at it. If you really need one, we have a broker, we can broker those out to others. But if you go through the site, we'll have one of our loan officers talk you through the different options you have for investment properties.
Okay. All right. Dan, I think Dan's got 3 questions. I don't know if they're going to have them all on the slide at once, so I can take my time and read out. Dan's wanting to know, what are all the costs?
So the cost would be the origination fee and then the interest rate. And the interest rate, of course, you pay over time. The origination fee is paid as a closing, though generally it's rolled into your rate. So the costs are fully disclosed on a loan estimate. You see all of them before you make any decision to move forward. So our folks we provide you a full loan estimate of all the costs and then which ones are rolled into the home equity line, which usually everyone just rolls all their costs in, though you can choose to pay them at closing if you do. But the 98% of our folks just roll. The costs are relatively modest, and they roll them into the loan and then pay them off as part of the loan.
Okay, and he's also asking points, document fees, escrow fees, any other?
So it's the origination cost is the point, the quote points. So the origination we pay the first 2, and then if you choose more to lower your interest rate, then that will be part of your loan estimate.
Okay, sounds good. I know this one more for Dan, and then we'll move on to Cody here. But Dan goes, is this only for owner occupied, or can this be for a rental or a second home?
So that is a great question, and let me check on the answer to that question. There's somebody out there watching who's gonna tell you the answer to that question.
All right.
Yes. Yeah. So it is. yes for rental. And so I see my guy already on my Slack channel. He's watching here and he says, yes, you can do these for rental and second homes. So boom.
Love it. Love it.
That's
Dan,
service right there from my guy, Joe. Shout out to Joe.
there you
My head of
go.
home equity. Hit me on Slack.
There you go. Shout out. Dan, we'd love to help however we can. If you have more questions, yeah, everybody, even go to the Gold Hub and then you can click on the exclusive home rate section. We're happy to help. All right, a couple more here. We got Cody. Cody for the income verification. Can he use the Robinhood 1099?
Um, uh, we connect to Plaid and we connect your Robinhood account through Plaid, which is a well-worn path, and that would be part of the documentation to go through. So absolutely.
Sounds good. All right, then Leo. This kind of goes back to similar question. Do you accept non-traditional sources like capital gains to support the income for HELOCs?
Yep, our guys are going to get a lot of practice at connecting Plaid accounts and those 1099s. But absolutely, that's a great option for people who are out there heavily invested like our concierge clients.
And I think this may be the same Josh, if it is, or if it isn't. Josh, we got Josh here again. Is the 5-year, so there's two questions here, I think, from the same Josh. So is the 5-year draw period interest only? Are there other options like a 10-year draw?
So it's not an interest only option. It's you're paying down the principal and interest. The 5-year draw period is the current the way we do it, but it's on a 30-year amortization. So the minimum payment is not substantial. It is sort of off of a longer amortization period.
Got it. And then he goes on, just wants to confirm that
And there are some other options, we can walk you through if we need to do some other stuff.
Sounds good. And he just wants to confirm this isn't a cash out refi. It's a clean traditional HELOC.
Yep, absolutely. So this is a traditional HELOC product, but we do have cash out products. And if you want to compare your blended rate, your payment, your durations, your terms, again, our expert loan officers can walk you through and do a comparison of all the different options for you, Josh. But this product is just a straight HELOC, though we do, of course, offer cash out refinances of all kinds.
All right. I think we cleaned through my count. It was
Whoa, look at that.
26 questions. All right, everybody, that will do it for today's live stream. Mike, thank you, man. I really want to thank Mike Malloy, the CEO of Sage Home Loans, for joining us today, providing us with this wonderful presentation around HELOCs. Thank you to everybody behind the scenes who made today possible. We appreciate you all. And last but certainly not least, thank you to everyone who joined. We hope you enjoyed the content. We can't wait to bring you more. For Mike Malloy, I'm Pat Dunn. We'll see you all soon.